Hello everyone, it's me, NYC Einstein from the Florida New York Stock Exchange. We are here December 19th, Wednesday, 4:38 in the evening, and I am burnt, I am shot. This is like Category 5 Hurricane Harvey day. Fed day, mid-December day. After months of absolutely wild and crazy volatile rides, I am now honestly able to say I'm completely baffled and confused as to what's happening, why it's happening, and how to make any sense of it, let alone have an edge on it in any way. The moves are ruthless, the moves are radical, directionality is confusing, it's reversed within 1 day's time, within an hour's time, within a 1 minute period of time. Today we had moves that were up 350 to down 350 3 or 4 times. I would say 500, 600, 700 point moves multiple times during the day. We opened up, market was strong, it was great, it was a good rebound. It was 11 o'clock, it was 12 o'clock, it was 1 o'clock. Market was up 330 points. Strong showing coming into the Fed numbers. What were people looking at? What was priced into the marketplace? We knew that there was going to be an interest rate raise today. We knew it was going to be 1/4 point. The question was, what was the guidance going to be going forward? Were they going to have 3 for next year, which was proposed back in September? Were they going to lighten that up? What were they going to do with the balance sheet? Was there inflation? What were they looking for? Were the numbers going to be data-based, data-driven, economically data-driven numbers coming out? Were they just going to lock in an amount for the year? Was Powell going to go up against the president? How much of the administration was going to come out in a wild card and tweet away and cause havoc? And then how is the market going to react to whatever came out? As we've used to have seen on Fed days, everybody's got an opinion. A lot of it's sometimes built in, some's priced in. People who think it's a great deal when they raise them and they've got guidance. There are people who think it's a bad idea. Are people on strike into the marketplace and there's just a lot of volatility, lack of liquidity, and the moves are going to be ruthless? That was my recommendation to people I speak to, and that in fact did come to fruition. Did I have an edge on which way it was going to go? No. What was the best move in retrospect was to stay out of the way and watch everyone get torn apart, and that's what happened. The initial move from up 330, when the news came out they were lowering them from, that they raised the rate was cool. Then they were lowering it from 3 next year to 2. Plus, they weren't really sure what was going to happen going forward, whether it was going to be economically data-driven. It was a decision, so that left a lot on the table. The fact that they were going to unwind $50 billion in balance sheets over the next year, tightening, quantitative easing. It's way too much information to me. I may look like Einstein, I ain't that smart. So the market sold off hard, went from up 300 to down 300. Then we rallied back. Right, we rallied back almost 250 points, so we ended up going back into green territory. And then it rolled over and went down 600. That's a 950 point move from the highs of the day to the lows of the day. And the market rallied back once again, probably about 150 to 200. The moves were ruthless. What would be a normal 10, 20, 30, 40 point move in the Dow or a 10, 20 handle move in the S&P turned into 300, 400 point moves multiple times over the day. I don't know if I offered any edge to my people. I don't know how to get a handle on what's going on. It's too economic for me. There's too many fucking pieces of the puzzle to even get a sense of really what's going on. I'm confused, I'm burnt, I have a headache, and I'm going home. So at the end of the day, we went from 3 to 2 moves for next year. We left a lot on the table knowing whether they're actually going to do it. We know they're going to unwind balance sheets, which is going to cause confusion on the end of the day. And the market closed a lot in the red, right? The only thing up was oil, up $1. But look at oil. Oil's down from 75, broke the 50s, broke the 45s, down to 47 at this point. The S&P down 40 handles, Russell down 30 handles. They said people were bailing out of stocks, flight to safety into treasuries. This market is broken. The Dow's at 23.3. That's 3,500 points off its high. We've broken all the levels in the S&P, the 50 and the 100 and the 200. So are people bailing into the market? Are funds getting liquidated? Are hedge funds getting liquidated? It sure does feel that way. Volume was significant. There are people definitely getting out of this market, definitely getting into other things, or getting into cash, trying to hold on to anything, any self-respecting number that they have in their 401k or their portfolio or what. So at the end of the day, that's all I got to say. A lot of red. Cash is king, green is supreme, but I don't know what to tell you. My hair is reflecting how I feel. I love you all. I'll see you all tomorrow. NYSE Einstein, inside first off. Take it easy.